If we take a look at the bull versus bears, side of this particular counter, Q3 business update suggests that there was a revenue growth of around 42%, but that as compared to the rise in gold prices year on year, that stands at 65%. Though all of that revenue growth has largely come in from a pricing growth perspective rather than a volume growth perspective, and that's been the story for a lot of these jewelry companies. The second argument remains with regards to where debt stands. They've said they earlier paused their debt with regards to some land acquisition claims going on, but now they have resumed their debt reduction and they plan to be debt free by the next year. But at the same time, the working capital days for them have really gone up in the past couple of quarters, and has risen to around 23 days. This is also largely on account of the way prices have panned out as to where gold stands. The next one, with regards to where the profit CAGR stands, that's been at a healthy 38.2% CAGR over the last 5 years. But valuations are nowhere near cheap for something like a Kalyan Jewellers. It's still sitting at a 57 times PE versus a 5-year average of 67 times, slightly better than the 5-year average, but still very expensive as compared to peers like PN Gadgil or for that matter Thangamala Jewelry as well. Lastly, in terms of where the segment candor stands, now Kalyan is focused on growing this particular business for them. This is largely an online business and a store that focuses more on lightweight jewelry. Kalyan has the candor segment has recorded a revenue growth of 147% this particular quarter, but it is yet to be profitable. And the expansion plans that the company has for candor store addition is also something that could put pressure in terms of where profitability stands. So this is the overall view of the bull versus bear case for something like Kalyan Jewellers.